AMD just held its biggest AI event of the year, and while they did not hold back, CEO Lisa Su took the stage at Advancing AI 2025 to share AMD's bold vision, leading the next wave of artificial intelligence. And the message, well, they said AMD isn't here just to play in the space, they're here to fully change the game. From hardware to full stack systems, we're going to run through all of the updates, all of the news, talk about the company, a bit of a stock analysis, and see how AMD are planning to go all in onto artificial intelligence. Now, a bit of a spoiler alert, they did reveal their next generation AI chips, and we also saw OpenAI CEO Sam Altman join Lisa Su on stage. As we said, we're going to get through all of this very shortly, but it's worth highlighting in just the last few months, we have seen a lot of green right across the board. That also applies to the semiconductor space, and in particular to AMD, that is up around 21%. However, we still note they are down year to date around 2%. In fact, they're down in the pre-market more than one after a very strong event. Yet over the last 10 years, longer term shareholders will note massive outperformance of the S&P, up nearly 4,500%. So we want to understand what's gone on in the event just yesterday. Is this one we should consider buying, as it does trade towards the lower end of the 52-week range, and both Wall Street and Seeking Alpha consider this company to be a buy, with a forward P now sitting around the 30 mark. Now, before we do just get into what went on, we also have to flag that we note some wider geopolitical news, where Israel did launch an attack on Iran's nuclear facilities, and that will play some part into where we see the market going, at least in the opening hours, and also maybe change the tune we have seen from investor sentiment that did just yesterday sit at 61 greed. And maybe some good news for investors, price targets have been raised after the event yesterday, just one analyst increasing it to $144, where it did initially sit at $126, and another analyst maintaining that the company is a buy and that they're very happy to see the expanded artificial intelligence roadmap that Lisa Su laid out. So let's get straight into it. Now, one of the first biggest reveals is that the AI data center market is expected to hit a mind-blowing $500 billion by 2028. It's growing at a 60% compounded annual growth rate, and AMD have made it clear they want a very big slice of that pie. So now it is a high-stake race with Nvidia, and AMD's betting big on the future of AI infrastructure, and this outlook highlights how central artificial intelligence compute will be to the global tech economy. Now, speaking of data center, we can see in just their latest earnings, whilst revenue was up 36% year on year, data center in particular was up 57%. Whilst that is their second fastest growing revenue stream behind the client and gaming, we can see it pretty much makes up 50% of their total revenue, and therefore it is incredibly important to their underlying business. Also worth highlighting, in just the most recent quarter, we saw efficiencies to their gross profit up 3 percentage points, 10 on the operating side and 7 on their bottom line net income, and that their data center continues to grow every single quarter. In fact, over the last few years, it has compounded on an annual growth rate of 56.4%. So this is one where Lisa Su does believe moving forwards, not only will they see continued growth, but at a much faster rate. What's also really good about this segment, as noted from their latest investor presentation, not only is their revenue up 57%, but also the operating income has in fact doubled. This is an incredibly profitable revenue stream, and we also notice they've been able to improve their margins from data centers 23% now to 25%. This, as always, as we would highlight, is a criteria of a high quality company, one that can increase not just their revenue but also their margins. We do, however, have to make it clear that based on the latest data, Nvidia is still king of the data center market, where they hold around 88%, AMD sitting at 3.8. Now, you could look at this at two ways. One, that AMD is going to find it hard to penetrate Nvidia and the grip they have on the overall market, or you could see it as a lot of room for improvement for AMD and therefore a very strong opportunity. And something that really turned heads yesterday is that AMD have said that 7 of the top 10 AI companies are already using their technology. We're talking OpenAI, Microsoft, Meta, Oracle, xAI, and more, and that is a massive vote of confidence in AMD's hardware. They're not just building the chips, they're also becoming the go-to name in AI infrastructure, and it's not just hardware adoption, these companies are also helping shape AMD's roadmap. Now we also have to flag it isn't just data centers when we think about AMD, they also have the CPU market share which they continue to expand in terms of their grip every single year. Just around 10 years ago it was at 13.8, now it does sit at 24%, and this is one they're also keeping an eye on. As we can see, this was their fastest growing revenue stream, up 68% year on year, and it's projected over the next few years to continue to climb, by 2029 around 40%, but it could go a lot faster, especially with all of the innovation that AMD and the team are driving. They also pulled back the curtain on their new powerhouse chips, the Instinct MI350X and the 355X. These things are absolute beasts built for AI training and inference at scale, and coming in 2026, the even more powerful MI400 series, AMD's answer to the next generation of AI workloads, bigger, faster, and smarter, with the MI350 expected to deliver 4 times the performance over the predecessor, a huge leap in just 1 year. And if we look towards their next 4 quarters, we can see 3 of them they are expecting growth, a drop in the next one by around 20%, whilst maintaining a 100% track record of either being in line or outperforming analyst targets, with their forward P for December 2026 at 569, indicating a forward P of 20.8, does look like a great opportunity if you believe in the company's longevity and also if they can really start to gain some momentum in the data center space. Their growth also does look strong at an A. We can see year on year it's up 22%, forward looking around 18%. Bearing in mind this is a cyclical industry, but still well above the sector in the mid-single digit. Worth flagging here though that they have been increasing their revenue at a faster rate over the last 5 years, and they're projecting earnings per share growth at 26% when the sector comes in lower at 14%, but again similar to top line, EPS also grew at a faster rate at 33% on average over the last 5 years. And we really want to drill the point that this is a cyclical industry, and you can really note that from the percentage change in their top line growth. 14% in 2024, sitting at 22% on a trailing 12 month. But one of our favorite metrics about the company is their net debt to EBITDA, really highlighting the balance sheet strength. From 2019, we see 0 across the board and into the next 12 months, highlighting it won't even take this company 1 day to pay off all of their debt, net of cash on hand. Now we have a game changer. AMD isn't just making chips anymore, they're building entire AI systems. It's called the Helios AI Rack, a complete setup combining AMD's GPUs, CPUs, as well as networking. Think of it like AMD's version of Nvidia's DGX, but open, scalable, and ready for hyperscale data centers. Each rack supports up to 72 GPUs. That's exaflop level compute in a single ready to deploy unit. And they're also boosting the software game. A great chip is only half the story, you need the software too. That's why AMD have launched the ROC M7, their latest AI software platform. It's faster, easier to use, and developer friendly. And they've also rolled out a new AMD developer cloud to help AI engineers get up and running in no time. So for devs who have been stuck in the CUDA world, AMD's now offering a real alternative that scales. We'll also flag that this is one that institutions do like. They have around 71% ownership, where they sold around $90.5 billion in just the last year. However, they did buy a little more in the last 12 months, and that's also noticeable in the most recent quarter, where they bought $4.5 billion versus $3.21 billion worth of selling. So clear and obvious, at least in the more recent quarter, institutions are bullish on the company. However, this isn't something we can say for super investors, given we only know 2 of them actually hold it in their portfolio. And in the most recent quarter, we see billionaire David Tepper fully sell out of his position, whilst 2 others with very minimal shares in their portfolio reduce it slightly. Now, to cap it all off, OpenAI's Sam Altman showed up to say they'll be using AMD's MI400 chips, and Oracle also jumped in the conference with plans to deploy over 130,000 AMD GPUs in their cloud. That is absolutely huge, and it proves AMD isn't just promising big things. The biggest players in artificial intelligence are betting on them, and this kind of public backing gives AMD serious credibility in the AI arms race. Now, it's worth highlighting when we do look at Nvidia, one that is almost always talked about when considering AMD, in terms of a forward EV to EBIT valuation, they are fairly dissimilar from each other, trading around the 23-24 level, so there is always an argument that perhaps Nvidia is the better bet. Some investors will consider a split, whether it's 50-50 or not, but this is definitely one that could be for serious consideration in the portfolio. And before we jump into our own valuation process, we want to let you know that we have released our latest free weekly article. We drop one every single Monday morning to your inbox, where we cover severely undervalued stocks as well as what's gone in the market over the last few days. So click below, you can sign up and read straight away, where you'll be able to gain access to severely undervalued stocks for the month of June. Lots of information for each one, the upside that Wall Street themselves see over the next year, and on top of that, you can grab a spreadsheet of 19 stocks that Wall Street themselves believe have the most upside in the S&P right now. So click below, you can sign up and read straight away. Now, our intrinsic price for AMD does get to $137, derived from the DCF model. You can see we have the free cash flow year on year, most recent increase 115%. It is negative on average, as it has gone from negative to positive, so data is a little bit skewed, but we've gone 25% moving forwards, and you can see low, medium and high 20, 25, 30 respectively. As always, numbers here are subjective. You can grab a copy of this model by clicking on the pinned comment below. But if you use 25% with a discount rate, we get the present value of future free cash flows and terminal value, add together with the cash, subtract total debt, get to the equity value, divide by the shares outstanding, and get to 137, indicating 18% upside. Full transparency, for those that do believe it should be lower, at 20%, $98, meaning that right now the company does look to be overvalued, as we can see, negative 16. For those that believe it should be a lot higher, 30%, they believe Lisa Su will be able to help AMD capture the majority of the increase we will see in data centers moving forwards. Then it comes to $190, indicating 64% upside. Now, we typically on the channel go through the medium rate at 25% today. Where we're not done, we do apply an MOS, 10%, execute on that if it meets our 3 golden criteria: wide moat, strong financial metrics, and good forward-looking data. If you believe that in the episode today, a buy at $123, then we keep going till it's near the current trading price, and we're saying right now, we note AMD has bang on 15% MOS, with Wall Street indicating on average $130 over the next year, translating to 12% upside. Now, for those that do like the company but want a larger margin of safety, not to say it will get there, but at 20%, a buy at 109, at 25 around 103, at 30 around $96, and 35 around 89. So Advanced Micro Devices, or as some like to call it, Advanced Money Destroyer, 15% MOS, 12% upside. In your own view, do you see this as a buy, hold or sell? Don't forget, as always, to sign up to the free weekly newsletter, grab those spreadsheets, come and join us in the Patreon where we cover our buys and sells, and as always, have a great day. We'll see you all on the next one.